Let's bring in our next guest analyst. He's going to be able to sort it all for it. He's the co-founder and wealth advisor at VestGen Wealth in Chicago. Thanks for being on the show, Craig Bolanos.
Hey, Scott, it's great to be with you. I don't want to say it's much ado about nothing, but just like that retail spending in January took a little bit of air out of people's sales, I don't think yesterday's action from Walmart should be taking air out of everyone's sales there either. I think when you look at the base case, manufacturing, services PMI, non-farm payrolls, retail sales, non-defense CapEx, and jobless claims, all of it still points to a soft landing and a market that's been able to hold above 6,000 on the S&P despite all the tariff talk.
Right.
This is a good elixir for something that can slowly climb higher in 2025.
Now, I know what you're talking about, but maybe the listeners might not know. But, I mean, yesterday we saw the Dow off around almost 500, really due to Walmart and their reporting their earnings. But it wasn't really their earnings. It was really how they guided lower. Can I run it by us real quick so everybody knows what you're talking about?
Yeah, Walmart guided lower, and specifically Walmart said if these tariffs get especially tough in areas like electronics and some of the discretionary spend, they're going to raise prices and push it down to the consumer. And I think when people look at the fact that Walmart's trading at a valuation, the highest it has in 20 years, it's a stock that ran 19% in the last month, 72% in the last 12 months. Who's to blame everybody if the stock declines 4% and takes a breather off the earnings?
Yeah, it was. I think it was overdone. I mean, I'm not a massive bull of the market. I think we got some issues, but to see the market react like it did to that, I mean, we were down over 600 points at one point in the Dow, all because of decent earnings and maybe guiding a little bit lower for next year. And they had the CEO on. He made it very clear what he meant by what he was saying, and that when he guided lower, and it wasn't really that much lower either. They were up 5%, in sales this year. And or last year, and they're looking for 3 to 4% going forward. I mean, come on. I mean, really? But the market, that just don't you think that proves the market's a little fickle, though?
Well, I think the market's fickle, but here's something I'm going to be leading my team through today. It's reminding everybody about sentiment, because we're about to find out about the consumer again from the University of Michigan. And when I talk about sentiment, it's weird that with the S&P 500 at or near all-time highs, isn't that usually accomplished or accompanied by very bullish people? But right now, that's not the case at all. If you look at all of the investor sentiment surveys out there, guess what? People are feeling terrible. And last time I checked, you don't fight the Fed. New highs tend to make new highs. And most importantly, aren't retail investors a contrarian signal?
Yeah, I mean, you make a lot of sense there. I mean, we got Michigan consumer sentiment numbers coming out, expectation numbers, 5-year inflation expectation numbers coming out, 1-year expectation numbers. So there's going to be a lot of that comes in at 9 Eastern, 9 Central, 10 Eastern. So that'll be a decent read on the consumer. And I think a little bit of the shakeup yesterday was about the worries about the consumer. Which may be overblown. I don't know, but we are over 1.2 trillion in credit card debt, which is not good.
No, it's not good. But from an investor standpoint, again, just remember, the market tends to climb a wall of worry. So this potential tailwind that comes from negative sentiment is good. To your point, this $1.3 trillion of absolute credit card debt, I agree. The headline number is a problem, but the reality is people's balance sheets, home equity, investment portfolios for those that have them, people's balance sheets relative to the amount of debt puts it in a serviceable place right now today, and we have to keep that in mind. Everything's relative.
Before you go, I want to get your point on at least your opinion. I know you're more of a stock guy, but you've got obviously Doge has been in the headlines. It's going to be in the headlines here for the near future, and about they had Scott Bessent on the Treasury, our new Treasury Secretary, and he thinks they found like $50 to $55 billion so far, which is in the scheme of things. I mean, that's a lot of money. Don't get me wrong, but in the scheme of the U.S. economy, it's not that much money. But they're also talking about like a Doge dividend. What are your thoughts on that?
The Doge dividend would be incredible if something like that happened. although I don't know that we should be, setting precedent in doing it, but if you said to me, is Doge actually going to move the needle? The 20 million here, the 80 million here, the 100 million here that continues to get found and uncovered, I think it's incredibly meaningful and it's impactful. But the big statements is when you've got the new SecDef, Secretary of Defense, saying, hey, we're going to look to cut 8% of the defense budget spending each year for the next several years.
That's
Wow.
huge.
That's really what moves the needle, and that also moves markets, a.k.a. what you saw happen to Palantir yesterday and the day before.
Interesting. I got some good research on Palantir. Now, I'm talking around numbers, but, I think they're priced at 200 times earnings. Is that correct, roughly?
Yeah, and like 62 times sales alone. Those are big numbers.
Right, but, so the argument was, do I want to buy NVIDIA at 30 times earnings or do I want to buy Palantir at 200 times? What say you?
I think you always follow the math, because if you follow the math over the intermediate to the long term, it's going to lead to a repeatable process. And I think people can do their own math.
And the last thing is that I'm not asking you about this, but I'm going to talk about it in the next segment if we don't get any callers. But it's going to be about the debt. I mean, per U.S. citizen right now, just per person in the country, we're at about $107,000 in debt per person. Per taxpayer, it's $323,000. That's got to change, and we can't wait till it has to change. We have to do it beforehand because that's going to be a problem. I'll give you 5 seconds before we go.
I just hope and pray that by the end of this administration's term, they do find a way to balance the budget, and whomever the electorate puts in place to carry the torch continues that process so we don't all end up upside down and inverted.
Awesome. Great to talk to you. You're always the guy to have on a Friday before we get the day kicked off. Everybody loves a Friday. We only get 52 of them a year, so we don't want to screw any of them up. Thanks for being on, Craig. Craig Bolanos, he's the co-founder and wealth manager at VestGen in Chicago. We're going to go away. We're going to pay some bills. Well, you know what I'm going to do? I'm going to give you the number again, 855-776-6147, 855-776-6147. You can text us or call us. I'd love to hear from you. This is Commodity Rep calling. We'll be right back right after this.
When it's your equipment for sale, you want qualified bidders and a seamless experience.